Welcome to Trade with MadFx, where I keep Forex trading simple. Most traders run from counter-trend setups, but that's exactly where some of the best opportunities hide, especially when you are trading on a larger time frame and there's a lot of room for price to move before it continues in that direction again. In this video, I'll break down a super clean, low-stress counter-trend trade I took. I will tell you why it made sense, why it was simple, and how you can spot the same type of setup on your own charts. Let's break down the setup step by step. Alright, let us start with the monthly time frame to get an idea of a bigger picture. And we can see on the monthly that we are pretty bearish overall. We have been creating lower highs and lower lows for quite some time now. And this was the most recent bearish break of structure on the monthly chart. So now, what do we expect after a bearish break of structure? A bearish break of structure would leave behind an unmitigated supply zone, and the market will come back to that zone to collect orders before it continues its move to the downside. Now let us apply this to our chart. This was the bearish expansion that created a break of structure, and now the expectations are that it will come back to some unmitigated supply zone to collect the orders, and then continue its expansion to the downside. Let us mark the unmitigated supply zone on the monthly chart now. As you can see, all these supply zones have been mitigated. Only this particular zone has not been mitigated from where the huge expansion to the downside started. Let me mark that supply zone so you get an idea. So now we expect the market to come back, mitigate this zone, and go bearish from here. If I zoom in, you can see that for a brief moment we actually broke above this supply zone, but we were unable to close above that zone. So we will consider this as a liquidity sweep of that zone, indicating us that it does not want to go above this zone for now, and we might be ready for some downside momentum, just like we anticipated. Now let us move to weekly time frame. We see a similar thing here. This was the bearish break of structure, and after that we came back to the supply zone that we marked. And even on weekly chart, we barely broke above the supply zone that we marked. Now let us move to the daily time frame. This is the supply zone that we marked on the monthly chart, and on daily time frame as well. We were not able to close above the supply zone. I will move this supply on the side and let us mark some structure. This was the last bullish break of structure on the daily time frame. And after the liquidity sweep, we had a huge bearish move to the downside, and that bearish expansion was able to create a bearish change of character on our daily chart. Now what do we expect after a change of character? We expect that the market will come back to an unmitigated supply zone to collect the orders, and it will continue lower as we are in a downtrend now. And that is exactly what happened over here. This was the supply zone on the daily chart that the market came back to mitigate. And once it mitigated the supply, a huge bearish expansion came, which was able to give us a break of structure to the downside. Let me mark that break of structure. Now what are the expectations after a break of structure? We expect it to come back to an unmitigated supply zone to collect orders and continue its bearish expansion. Now this is a daily chart, so there is a huge move to be capitalized on the bullish side before that bearish trade comes. And next question in your mind will be that how will we know when is the bullish pullback going to start? And for that we will use two confirmations. First confirmation is to look to the left. As you can see, while the market was in this zone, it's been a long time over here. There was some consolidation phase before the market decided to go up. So I was thinking maybe the market will use this zone to generate some kind of bounce that takes us towards supply level before we start going down again. But this is only our first confirmation, and only half the battle has been won. Before we risk our hard-earned money, we need to see a second confirmation. And for that we will need to go to lower time frame. So let us switch to a 4-hour time frame. So this 4-hour chart has been in a downtrend, as we can see. And this is the most recent bearish break of structure on our 4-hour chart. And once we touched this daily zone we marked, it gave a huge V-shaped recovery. And that was able to create a change of character on the 4-hour chart. This is our second confirmation, and now we can be sure that the 4-hour downtrend is over and we are going to move to the upside. And what do we expect after a change of character? We expect the market to come back to an unmitigated demand zone to give us an entry and continue to the upside. We also got a break of structure followed by a change of character that confirms the uptrend. Now our job is to find the unmitigated demand zone. I will go back to the daily chart to find the demand zone. As you can see, this zone has not been mitigated, and I expect the market to come back to this zone for our entry. This low that is created by the break of structure will serve as an inducement, and that will bring the price down towards our demand zone, give us an entry, and continue moving higher after that. If we enter using this daily demand zone, our risk to reward ratio will not be good. As you can see, we are only getting around 1:3 risk to reward ratio by entering at this daily demand, which is not very ideal. I personally do not take any trades under 1:5 risk reward. So we will go to 1-hour time frame now and take an entry after we get a confirmation. This is the daily demand that we have marked for our entry. Once it came to our zone, it had a huge V-shaped bounce again. This was the last bearish break of structure once it came into our demand zone, but it was not able to close under that. So it ended up being a liquidity sweep. And after that happened, we got our bullish change of character. That was followed by a huge move to the upside. So this confirms that we are ready to bounce from here. And that was the confirmation I needed to take an entry. Now our next job is to find the demand zone to enter from. This is the demand zone I marked on 1-hour chart for my entry. I put my limit order above the demand zone as the risk was tight. My stop loss was under the demand, and I gave it little room to play with. And this was my target level, and that gave me a risk to reward ratio of 1:6, which is pretty good. And just like I anticipated, it worked out pretty well. On the 4-hour chart, you can see it's still pushing higher, and next week it should give few more bullish entries on this same setup. If you want to see how I will trade next week's setups, watch this video, where I break down how I use daily levels to take multiple winning trades from one single setup. Thanks for watching. I will see you there.